Your Excellencies, Secretary to the Ministry of Finance and Member of the Monetary Board, Secretary to the Cabinet, other distinguished invitees, my dear friends. May I first of all thank all of you for being here this morning. I know for most of you it's your first day of work for the new year, but nevertheless, let me thank you for being here with us to be able to share with us the monetary policy as well as financial sector policies that we have drafted and crafted to be implemented over the next 6 years. I also want to thank the Secretary to the Treasury for making a presence this year. As you know, he is also one of the most busy persons, and taking time off to be with us today is indeed a privilege, and I believe he'll also be able to throw more light to the policies in his speech that would follow. As you all know, this is the 9th time that we are presenting these policies and the 9th consecutive year in which we have shared with you the plans as well as the policies that we would unfold over the next several years. And as in previous occasions, it will set out our policy framework. It will give you an insight about the reasons why we are undertaking certain policies as well as implementing certain policies, so that you, as the business leaders of our country, would be able to mold your own plans to make use of the country's direction as well as ensure that you are consistent with the plans that the government as well as the central bank are hoping to implement over the next several years. The year 2009 was an important year for us because we could really see the structural changes that were taking place in our economy from that time. And the changes that have taken place, I can assure you, my dear friends, were not changes that resulted from an accidental kind of a situation, but carefully thought through, carefully implemented plans of the government and the central bank. As Dr. Veera Singh mentioned to you, our process begins about 1 year before the year in which the plans are to be put out to you. So we are proud as a central bank that we have been able to also mold the country's economy to be where it is today as a result of the meticulous planning and the diligent implementation that we have put in place. 2014 was a year of significant achievements. We had a real economic growth of 7.8%. It's very likely that that would be the number that we would generate and have in the next few months when it is announced. We have finished the year with an annual average inflation of 3.3%, one of the lowest in our history. Unemployment has been stabilized at around 4%. We have a healthy external position with foreign reserves peaking at around 9 billion and remaining comfortable today at about 8.2 billion or about 5.2 months of imports. We have a greater stability of our exchange rate. There has been continuous fiscal consolidation, which has reduced the budget deficit to 5.2% and the public debt to around 75% of GDP. There has been a high level of public investment at around 6%. It's available for all of you to see in various parts of the country. We have had continuous financial system stability, and there has been a rapid expansion in the equity market of around 23%, and the debt markets have also stabilized. It's a far cry from where we were in the past. I remember as a young chartered accountant in 1976, 1977, we used to be called upon regularly to prepare feasibility studies for various projects that used to come at that time. And there were certain assumptions that we used to make. And the assumptions were generally a 10% depreciation of our currency, interest rates of around 20 to 22%. We used to have inflation running at 14-15%. And when I joined the central bank in 2006, the general feeling was that if we can maintain it around the 12 to 15%, that would be a comfortable level. But all that has changed. Today we are looking at a new scenario, a structurally adjusted economy that we should now build upon for the next stage of development of our country. And these achievements were recorded amidst diverse conditions of the global economy. In 2004, the emerging economies of the world were growing at 8%, but not so Sri Lanka. In 2005, the emerging nations were growing at 7%, but not so Sri Lanka. But today, when the emerging nations are growing at about 3 to 4%, and the advanced nations are growing at 1 to 2%, you can see Sri Lanka has become an outlier. We are growing at nearly 8%, which is a complete difference of what we were in the past. And Sri Lanka's growth performance, if you compare it with the world, with the advanced economies, emerging markets, as well as our own region, we could see that we are ahead of everyone else. But at the same time, that tells us that we have to now make use of this new platform to go forward in the next few years. One of the marked performances of our economy over the last few years, and this is something that the Secretary Treasury and I have been jealously guarding for a long time. After you have single-digit inflation for 3 to 4 years, then you want to ensure that it is there for the next decade or so. It's like Sangakkara, when he gets 50, he is very keen to have 150, not to go to 60 and get out and go. So that hunger, that determination is presently there in the central bank, where we are very keen that the inflation that we have been able to now establish at low levels and a new norm is ensured for the future levels, for the futures as well. So this year we end with a year-on-year inflation of 2.1% and an average inflation for the year at 33.3%. And what is most significant is that end of December signified the 71st month in which we have had single-digit inflation. And today the average of that 71 months is a mid-single digit, which I believe all of you are benefiting from by way of low interest rates, by less claims from your staff for higher increases in salaries, a greater stability in the way that you prepare your own feasibility studies as well as your own accounts. So that stability has occurred as a result of the price stability that has been established with a great deal of work behind the scenes. And what is even more important is that these levels of inflation has been achieved whilst we have been also having high levels of growth. Now, if this chart shows you the different years where it is tracked the growth as well as the inflation. Now, there are some years where we have had high growth, but we have had very high inflation as well. That region that you see in red are the danger zones. The region that you see in green are the less dangerous zones, and the areas which are closest to the left are the really good areas to be at. So this year, 2014, will be the best year that we have seen since the liberalization of the economy. The highest growth with the lowest inflation. Now that's the formula that we are working towards, because we are very keen to ensure not only do we have low inflation, but we also have high growth, which is why the country could then move forward with a greater degree of confidence. In fact, we have been able to establish an unprecedented macroeconomic balance over the past 5 years. If you plot inflation versus growth, or you plot exchange rate versus inflation, or you plot the budget deficit versus inflation, or you plot the growth versus budget deficit, you would find that in all those areas, we are in the benign number category, not in the danger zones. We have been in the danger zones. Those black dots show you the other years, but in the last 5 years, since the end of the conflict, you can see that Sri Lanka has moved into the benign areas, and that's one of the key parts of the economic strategy that has been implemented. Now let's take a close look at the main sectors of the economy. There are 4 key sectors that we look at: the fiscal sector, the monetary and financial sector, the external sector, and the real sector, where most of you are involved in. If you look at the per capita income, we have seen that per capita income from the year 2005 to 2014 has had an unprecedented growth over the last 9 years. In fact, it has tripled. Normally, if you have a doubling of per capita income within a period of 8 to 9 years, it is considered to be satisfactory, or is considered to be even better than satisfactory. But we, as a result of all the efforts that all of you have put in, together with the government as well as the central bank, we have been able to achieve a new phenomenon in our economy where per capita incomes have risen threefold in that period. If you look at the period 2000 to 2004, a period of 5 years, you have a flat per capita income. That part of the equation is almost flat. There has been no growth of material value during that period. But today, we now have a goal moving towards the $4,000 per capita income, which was established to reach in 2016, but it is now clear that Sri Lanka would reach that level of $4,000 per capita income by the year 2015. Now, this high economic growth throughout the years and across the sectors has facilitated the sustainability of our economy. If you look at the way Sri Lanka has been progressing, you would find that the quarterly economic growth has been fairly stable, except in the year 2009, which was one of the most difficult years in the history of the world economically. All the other years, we have seen reasonably good growth levels and at high numbers. The right-hand side of the slide shows you the different periods and the average growth of those periods. And if you take the period 2011 to 2014, you can see that it is at least 50% higher than any other period in our history, and that growth has been sustained at that level for a long period of time. We have had instances where growth has gone to 8%, and there have been several years of that nature. But the next year, it has crashed down to 2% or 2.5%. This period, as a result of the careful planning and the meticulous implementation, we can say that the growth has been sustained, and that is what is important for us to recognize and to build upon. The services sector has continued to be the leading sector of the economy, and it is today contributing something like 57%, and it is expected to grow by about 6.5% this year. The industry sector is going to record the highest growth this year, about 12.5%, and it accounts for about 33% of the entire GDP composition of our country. The agricultural sector has maintained its positive pace, and it today accounts for about 10% of the total GDP of our country. And this year, as a result of the adverse, I'm sorry when I say this year, it is really last year. We are now in the next year, of course. Agricultural sector will record growth of around 1.3% only, because we had at one time a drought as well as in another time a flood. Someone asked me some time ago, Governor, whenever there is a flood, do you adjust your figures? I said, no, we don't have to, because at the time that our economic research teams prepare the figures, they do factor in that Sri Lanka would have sometimes a flood or sometimes a drought. And part of that is also a risk that we have to address. And unless there has been an unprecedented flood or an unprecedented drought, we may not need to make adjustments of that nature, because there's always a certain factor that is put into our figures in order to ensure that that kind of risk is also brought into the picture. The lagging provinces continue to perform better. You would find that in 2005, the Western province accounted for 51% of the GDP composition of our country. Today, it is just 42%. It's not because the Western province has gone backwards, but because the other provinces have also had very important growth taking shape. The chairman of the Finance Commission is here, and he will also tell you that as a result of the very equitable as well as fair distribution of funds right across all the provinces, we have been able to ensure that there is provincial growth as well as provincial prosperity that is going right across the nation, which is another very important facet of the development process of our country. Unemployment has remained low, while labor productivity has continued to improve. The unemployment rate was 4.3% in the first half of 2014, and the labor force participation rate has also now reached 53.5%. And if you look at the movement of labor productivity, the last part of that graph shows you that there has been an incline in that graph more than what other countries have been able to record, which means that Sri Lanka has been on an improvement of the productivity, and that's something that we need to work on even in the future, because that would give us a lot of space in monetary policy as well, because we would have that space to also contribute towards the investment in a different way, because without making material as well as resource investments, we would have the investment that will be generated as a result of the productivity levels going up. The poverty levels have continued to decline, and we see a sharp drop in the provincial poverty levels. Every single province other than one has recorded a decrease in the numbers. Sometimes I have heard the criticism, Mr. Secretary, that if the poverty levels have gone down, why is it that we still have Samurdhi beneficiaries? I think Dr. Jayasundara might allude to that, but it is because the Samudri payments are mostly a politically driven system, and sometimes even though people are taken away from poverty, many politicians are not too keen to remove them from the support of the Samurdhi, and that may be why it is there. But you can see that there has been an improvement in the material comforts that people have, and that's now signified in the ground level as well. We have seen a notable expansion in exports, and exports are expected to grow by over 10% to about 11.4 billion by 2014. And every month, other than one particular month, we have seen a sharp increase in the imports, in the exports year on year. The exports have been having a less spectacular increase, more modest increase, and the imports are expected to grow by about 7.8% to about 19 billion by this year, 2014. The increase in the export earnings has been supported by a contraction in the trade deficit in the first half, although a gradual expansion of the trade deficit was observed thereafter. And the trade deficit is expected to increase by 4.7% to about $8 billion in 2014, as against $7.6 billion in 2013. Now, on many occasions, I have heard persons questioning whether we should work towards increasing our exports. Yes, we should do that, but at the same time, Sri Lanka has undergone another structural change. It's not only that we export goods now, we export services as well. And very often, when we look at the figures, as well as look at the reporting of those figures, we sometimes do not pick the fact that Sri Lanka has had a structural change in its economy as well. Some of you are selling services of consultancies. Some of you are selling services as tourism, as ICT, as transportation, as hotel services. All these are also areas where we receive foreign currency, but at the same time may not get into the bucket which shows the export of goods. So that structural change is sometimes not captured, but you would see in the way that Central Bank reports the external sector performances, we always now use all these sectors to describe the way our economy has been moving in the external sector. In the meantime, tourism reported a robust growth, and the earnings from tourism has gone up from about 1.7 billion in 2013 to about 2.3 billion in 2014. Spectacular performance, and the number of tourists have also increased. I think just a few days ago, Sri Lanka welcomed the 1,500,000 tourists as well. far cry and much more than what we were used to at about 400,000 tourists way back in 2005 and even as recently as 2009. The ICT industry has also recorded very improved inflows, 2013 of 719 million and 2014 of about 823 million. And what is most significant is that there is a workforce of around 80,000 persons now working in the ICT sector. Transportation services have also had a rise, going up from about 1.8 billion to about 1.9 billion or close to 2 billion. Again, a new sector which is providing new impetus to the economy. We have also seen the growth momentum in the remittances. This year we will record about $7 billion, which is a substantial sum of money that is coming in. Many have sometimes mentioned that it may not be sustainable, but that non-sustainability story I have heard for the last 9 years. But each year there has been an increase which has been sustained, and it's very likely, if we have a strategy right, where we are having people of skills going across, they'll probably spend a less number of years outside, and they will also be able to generate greater amounts of income, which would mean that again another structural change would take place in our economy in that field as well. All these inflows have led to the contraction of the current account deficit, and that's being seen quite clearly in our figures. And the significant structural change, if you capture it as in a summary form, you would find that there are several areas in which Sri Lanka is now performing differently to what it was doing in 2009. Earnings from tourism has had a sharp increase. ICT services have had a sharp increase. We have seen workers' remittances also having a steady flow continuing. Merchandise exports, although numbers have reduced as far as percentages are concerned, we can see that that's also rising. All of which shows that Sri Lanka is gradually adjusting itself to this new norm, which we all need to now recognize and make use of when we go forward. It's no use saying, you know, we had this much of percentage in our imports or this much of percentage in our exports, now we should get back to that. It's not necessary. We need to see what is the new norm. And on that new norm, we have to adjust our economy, as well as you have to adjust your own economic activities so that you can make use of that new norm. We have to set our sail to the direction in which the wind is blowing to ensure that we move on that basis so that we can make use of that movement so that we can all do well, better in our own businesses as we go along. And the capital at the financial account has also improved, and some numbers are very significant. FDI this year will probably be close to $2 billion. Sometimes people I've heard saying it's not enough. But in 2005, the highest amount of FDI that we have had, I think Secretary would tell you, is 200 million. Just 200 million. And that time, it was also inclusive of certain privatization proceeds. Now, we see a more cohesive FDI, where people are coming and making the right investments in our country. Just a few days ago, I remember I attended the groundbreaking ceremony of the ICT Sheraton Hotel project, just in front of the golf face. And the chairman told me that the highest ever investment that ICT Mayura had done in India or abroad has been the project that they were putting money down that day at the golf face. So there has been people who have come because they have confidence in the economy, and that's something that we need to sustain and ensure, because that comes with a lot of searching, with a lot of due diligence, and that's something that we need to ensure that we keep going, because now we can see the FDI is coming in thick and strong, and that's something that we need to protect and nurture to go forward. There has been net inflows to the stock exchange. Project loans to government has also been an important part of the total inflows. International sovereign bonds last year raised $1.5 billion. The foreign borrowings by the banks have also been close to $1 billion. Corporate sector inflows has been again about $850 million. So you can see that there has been many investors who have been keen to get involved in our economy, and that's progressing as planned, and that's increasing as time goes on. The BOP has improved substantially, and you can see that we would probably have a BOP surplus of around $1.4 billion this year, compared to about $1 billion the previous year. Another important part has been the stability of our rupee. If you look at the way our Sri Lankan rupee has performed as a result of the various macro policies that have been put in place, as well as the efforts of all of you in the private sector, you could see that the Sri Lankan rupee has depreciated by about 0.25% during the year against the US dollar. But at the same time, it has appreciated by nearly 6% against the sterling pound, 13% against the euro, 13% against the Japanese yen, and about 2% against the Indian rupee. Now, the normal conditions that we would have been used to, Dr. Jayasudhara, would have been that all those appreciations would have really been depreciations in the past. And this has also taken shape. At the same time, we have had an improvement in our BOP account as well. Again, something which we had to ensure that we capture and maintain, because maintaining a currency at a robust manner is important. It's not that we are propping it up in an artificial manner, but at the same time, having a currency which is stable enables businesses to do their projects, enables you to make your own forecasts much better, and that's another important benefit that we from the central bank need to give it to you. And I can assure you that we are working very hard to provide that stability for the entire external sector, as well as those who are doing business with Sri Lanka. We have maintained a healthy level of international reserves. Right now it is about $8.2 billion, which is in the range of about 5.2 months of imports. But now we are going to move a little further, where we are looking at ensuring that our reserves portray about, where our reserves would portray roughly to go to about 100% of the short-term loans that we have. That's a suggestion that was brought in by the Secretary to the Treasury, which I thought was an excellent suggestion, so that not only do we benchmark our reserves as against the months of imports, which is the traditional way, we will also now consciously look at the coverage of our reserves as against the short-term debt and work towards that to improve the composition, so that we would have a reserve which is roughly equivalent to about 100% of the short-term debt, so that our external sector is stabilized even further, thus ensuring that we will have the confidence to look at any crisis in the future. And the prudent monetary policy that we have employed continued in 2014. As you know, in January 2014, we reduced our policy rates. And then in September, we also brought in a rationalization of the SDFR, the standing deposit rate, so that banks also would be compelled to lend and not only park their money with the central bank. And that way, there would be an incentive for them to lend as well, because the interest that the central bank would pay would then be less than what they would have been entitled to otherwise as a result of the policy corridor that we had established. And the high level of liquidity was mainly due to the purchasing of foreign currency by the central bank, and as a result of the high level of liquidity, we had to sterilize that part of the liquidity that was there, and it has cost us something like 17 billion rupees in order to provide that stability to the banking sector as well as the country. So the banks have made the 17 billion rupees. So when you put your pictures of your chairman as well as your CEO, remember the central bank also, because 17 billion of those funds have been as a result of lending to the central bank. And perhaps you may consider having Swarna's picture as well, who is our Director Economic Research, because she has also contributed a great deal to the bank's profits by ensuring that the liquidity is mopped up, and therefore that stability is also brought in to the entire country's banking system as well. The proactive monetary policy has ensured that our policy rates stay on course, and we have also experienced a gradual decline in the market interest rates. The reduction in the treasury bill rates have been about 200 basis points, and all rates have reduced by about 300 basis points, and that has been another movement towards greater stability and a greater level of certainty in our economy. The monetary expansion was broadly consistent with the expectations during 2014, and the broad money growth was sufficient to support the economic growth while maintaining the lower inflation levels that we have experienced in 2014. One of our main targets for the future, and one of the most important factors that we would be looking at in our monetary policy decisions of the future, would be the monetary expansion, which is reflected in the broad money growth, and we would be looking at that to be the main component of our monetary policy, because we believe that the subcomponents of that could change, but if we have the overall broad money growth at the levels that we desire, we would be able to ensure that the inflation is maintained at the right levels. The net foreign assets have also contributed positively, and one of the components through which the broad money was supported was the increase in the foreign resources, which again is an improvement of the past, and that's also another important factor in our whole equation. The credit to the public sector was contained. It was just about one half of what was provided last year, and that's an improvement in the movement. And effective measures were taken to induce credit to the productive sectors as well. There was a time when we did see that the credit movement was a little sluggish, and there were certain incentives that were provided with a stimulus in the form of relaxation of the monetary policy. Pawning advances were supported with a guarantee scheme. We rationalized the standing deposit facility, and we provided a certain flexibility in the reserve maintenance by the commercial banks, all of which helped to induce further credit to the productive sectors. Fiscal consolidation took shape. If you look at this graph, it's one of the most important movements in our economy. For a long time, we have been used to fiscal deficits of around 10%, and any instances where we had double-digit fiscal consolidation, fiscal deficits was not thought through as being something really dangerous. But the last several years, you would see that there has been a gradual pulling back of the fiscal deficit, and I must, of course, here congratulate the Secretary to the Treasury for bringing that financial discipline, which helped us to have this feature into our economy, and this year at around 5.2% or thereabouts would help us a great deal to project the inflation levels and to give a feeling that inflation would be contained for the future as well. Again, a very, very important feature in the inflation expectations management, because as soon as you see an increase in the fiscal deficit, you would find that people would expect to see higher inflation, and that itself would probably drive inflation to higher levels in time to come. So management of the inflation expectations is a very important part of the central bank stability objective, and I must say that help that has come to the central bank by way of a contracted fiscal deficit has been a very important part of the entire equation. We have also seen a structural change in the economy, and today we thought we'll share this slide with you, mainly because there has been instances where people have been thinking that the revenues being short or revenues being lower is a huge problem for the country. Of course, we all like to have greater revenues, but when you have greater tax revenues, what it does indirectly is that it reduces the amount of money that you have. You will have less money for your economic activities, which means you will be providing that to the government. And when that goes to the government of course will have more money for their own projects, but at the same time, that would mean that you will have less money in your pocket. So sometimes when I hear politicians saying, look, we need to increase the tax revenues, I'm wondering whose side they are on, because you have to have a balance in these features. So if you look at the way Sri Lanka was in 2009, we had salaries, wages and pensions accounting for about 5.6% of GDP, interest payments of about 6.4%, other recurrent expenditure of about 6.2%, public investment at about 6.8%, and debt repayments of about 10.7%. Now, That was funded through the financing, tax revenues of about 12.8%, non-tax revenues about 2.2%, which means about 14% came from the taxes, and borrowings accounted for about 10%, 10.8%, and there was a budget deficit of about 9.9%, which again was funded by further borrowings. Now that has changed come 2014. You would find that as a result of the increase in the GDP value and the composition, you would see that salaries, wages and pensions now account for about 4.1%, and interest payments now account for about 4.4%. Earlier, 6.4% of GDP of our country was used to pay the interest bill. Today, it has come down to 4.4%, and that's a massive reduction that has helped the government to embark on other projects as well, and that has been an important safety net and a space or a cushion that has been inbuilt into our economy through meticulous planning. Other recurrent expenditure is now about 4.9%, public investment about 5.5%, and debt repayments about 6%, which shows that there is now a greater cohesion and a better management of the numbers so that we are able to do more with less. Of course, the numbers itself in absolute terms would have increased, but at the same time, you would find that while that increase was taking place, that we have been able to make a substantial adjustment in the way Sri Lanka is now spending its money, and to ensure that the same services are maintained, but at the same time, a greater deal of economic activity is also now created within the economy. It has been funded with revenues of about 13.6%, borrowings to repay the debt of about 6.1%, and a budget deficit which is now 5.2%. A lot more sustainable equation has been developed. Of course, there can be some improvements that would take place, and those are being planned, but at the same time, you could see that the spaces that have been built up are now extremely helpful for us to go forward. I already spoke to you about the recurrent expenditure as well, so I can go through the next one. And the debt to GDP levels have now improved consistently as a result of all those adjustments that are taking place in our economy. If you look at 2005, our debt to GDP level was as high as 91%. And over the 9 years, it has gradually come down to 75%. And now, when we look at Sri Lanka and compare it with the rest of the world, you would find that we have several other countries at much higher levels of debt to GDP levels. If you take Japan, it is 228%. That is about 3 times what we have. Greece is 171%. Italy 133%. USA 103%. Singapore 104%. UK 91%. Germany 77%. And Sri Lanka 75%. So sometimes you hear these horror stories that we are in a debt trap and that we are in difficulty. That's not tenable, because if you look at the numbers, you could see that Sri Lanka has been able to manage this process carefully to bring it in line with the more sustained economies. And I'm sure we're still not satisfied with that. If you ask any one of us, we will say we are not still satisfied with what we have got. We need to do better, and we would like to see it at the 60% or less, and we are working towards that. There is no magic wand that you can wave where the debt to GDP levels will come down suddenly to 60%. And if you had tried to do that, it would have meant that there would have been a great deal of instability being caused to the entire economy. So it had to be a gradual reduction. It had to be on a process which is clear, but at the same time a process which was manageable. And that, my dear friends, is what has happened. Our economy has grown as a result of the diversification of the areas through which the economy could move. Today you see the 5 hubs plus agenda, which is providing space for new areas of development. Earlier, when people looked at Sri Lanka, they used to look at the tea, coconut, rubber. Then subsequently they started looking at gems and jewelry. Subsequently they added tourism. And now we came to a level, after we had added apparels also, that there was a need to have new stars coming into the economy. I'm sure many of you are familiar with the BCG matrix, where you have to nurture stars to become the cash cows of the future. Cash cows don't come overnight. Those have to be nurtured over a long period of time, so that then those could be positioned to become the the cash cows of the future. But there has to be a pipeline, the same way that you have in your order books a pipeline of different orders. For a country also, there has to be a pipeline of different projects, of different schemes, which would bring the entire economy to a level of sustainability over the long period, not just for 1 or 2 years. So whilst other areas are moving up, introduction of new areas have to happen, because it's only then that the business will get used to it. There will be people who will invest. There will be outside interest coming into the country, and all that takes time. The same way, 25 years ago, the apparel industry would not have reached where it is today. But it needed a long time and an articulation of that policy by the government in order to reach where it has reached today. In the same way, the articulation of these 5 hubs, the maritime, the aviation, the knowledge, the commercial, and the energy, together with tourism, which has been rebranded, those will be our future. But those also need to be supported in time to come with new features at regular intervals, so that we add to the diversification of our economy, and that's what will take our economy forward for the next 15, 20, 30, 40, 50 years. Some investments have to be made for the longer term. If you go along the highway going to Matara, you would find that we have 4 tracks, 4 lanes. But there's provision that has been made where the mountains have been cut for 8 lanes. Now, after 4 lanes have been done, you could not have, whilst the people are going on that road, 25 years later, you couldn't have blasted rock to cut those massive mountains. It needed to be done at the beginning. The land had to be acquired at the beginning. It's very easy for someone to say, look, someone has spent too much money. I feel a little hurt because we are all public servants. And public servants have various ways in which procurement is done. Although I'm the governor of the central bank, I can tell you, I cannot recruit a single person to the central bank without a due process being followed. We cannot give a contract to somebody for even a janitorial service unless there is a process that has been followed. And that process will be followed by public servants who do their job diligently, who have certain processes, procurement guidelines, and according to those guidelines, there will be jobs done. Once it is done, the authority will be given because the process has been followed properly. Now, these are sometimes the conditions that we do not understand, because sometimes the headlines are what we see. We need to dig deep, we need to drill down, then we know what really is the situation. And I can assure you, we do have very good regulations in our country. We do have processes and practices that we implement diligently. And I can tell you, as public servants, we have one of the greatest teams in our country at the central bank, but other institutions also have very dedicated, committed public servants. So I would hope that all of you would also understand that these public servants have a certain duty to perform. They have certain processes to follow, and that is why we can be sure that the integrity of the system has also been followed over a long period of time, and it is being followed. And I can personally tell you that all these people who come and invest in our country are also clear that we have processes which are diligently followed, and that is why they have confidence in our economy. Let me also go into the infrastructure development projects. There are many projects that are being implemented. Some have been completed. Some there is a very good pipeline of projects that will take us forward. And we do have a pipeline, which is important, that there is each year a certain number of projects that would be implemented so that we would have public investment taking place. But at the same time, we have our infrastructure levels improving year on year so that people will think this is a country to go to. We are a breakout nation. Now that part is also important for us to give a signal right across the world, because it's only then that we would be able to see the confidence levels in our economy growing, and we need to establish that principle because that would take us forward for the future. We have improvements in the SOEs. I know what a struggle it has been to improve the SOEs. Again, an area that the Secretary Treasury and I have had many conversations. There has been certain changes that have been brought in the way that the Petroleum Corporation has been managed, certain changes in the way the the Sri Lankan Airlines has been managed, certain changes in the way the Ports Authority has been managed, certain changes in the Electricity Board, all of which has brought stability to all those institutions as well. And that's something that we need to ensure we continue, because you would see that when establishments make profits and they are on the right side, you would find that the management of those are much better. So the fundamentals have to be addressed, and those have now been addressed, and we are moving forward with a lot more confidence. The electricity generation mix has been also an important. The two pie charts that you see there are extremely important from the point of view of this country's sustainability. Earlier, you would see in 2009, we had 60% of our power being generated out of thermal, 34% by hydro, and 6% by mini hydro and other renewables. The change has occurred significantly come 2014. Today we see the thermal oil accounting for only 36%, a massive reduction. Coal accounting for 26%, renewables accounting for 9%, and hydro 29%. So you can see the model is becoming more and more sustainable. The outflows from a point of view of the foreign outflows are also now curtailed. We could see that now we are going into an area which is sustainable from the entire economy's point of view. So that is why certain changes could be made in the tariffs, which has helped you. When you see that the tariff is reduced for domestic consumers or industries, for hotels, all that will tell you that the benefit of that is now in your own businesses. I remember people grumbling that we had one of the highest levels of electricity for a long time. Now that's changing over time. Then through innovative financing, urban development has also gained a new momentum, new sites being developed, and particularly the underserved settlements was funded through a very carefully structured bond program, again something which was innovative. Earlier we were used to, when we were talking about underserved settlements, we only looked at providing electricity to an underserved settlement or giving water to an underserved settlement. But the underserved settlement was there, 60,000 of those. Now we are looking at a new model. We'll change all that and not building 25, 30 houses, building 60,000 houses. Now those are massive projects. It has to be carefully thought through. Plans have to be done. Funding has to be arranged. A sequence of repayment of those funding also has to be arranged. All that is carefully thought through programs which makes it sustainable. Otherwise, lots of times people say, we'll do this massive project. It's limited to the plan only, and there is no work done on the ground. But that has changed, again, through innovative financing, innovative programs, which has been able to sustain itself and thereby ensure that these changes are taking place. The central bank fulfilled its financial system stability function. I think that's felt by people because there has been no disturbance in our financial system. And the banking sector has also had a challenging and a growth momentum over the years, particularly the last year. And the outreach of banks has also improved. One of the significant changes here is that as a result of the policies that we have implemented, the banking density, province-wise, where the northern province was the lowest in 2009, has now reached the level of being the highest. Again, improvement in the way the banks have cooperated, and I want to specifically thank all the banks who have helped a great deal in bringing that change across. And as a result of what you have done and as a result of the outreach that you have provided, we will be changing our policies about branches, which I will announce in the next few minutes. The performance of the banking sector in regard to the trends in loans, assets, deposits and borrowings all have improved. And the key banking sector indicators also indicate that capital, NPLs and provisions are also on the improving trend. And over the period of 2009 to 2014, Sri Lankan banks have been able to integrate with the rest of the world by raising over $4 billion. Now what is significant and important here is not only the number. It's the trust and the confidence that foreign investors have in our banking system. We all know that nobody will come and invest 2 cents unless they had confidence in the system. because they have confidence in the system, because they have confidence in the macro fundamentals, and because they have confidence in the management of the banks and their governance systems, we have found that people are now ready to come in and invest with Sri Lanka as well. That's why we have seen investments coming from the Middle East, coming from the US, coming from Europe, coming from Asia. All that is because of the new level of confidence that you yourselves have also been able to build, and that's something that we need to ensure continues as well. Greater stability and the strengthened stability is taking shape as a result of various changes and improvements that we have made to the banking sector, and I'm sure the bankers are familiar with those. And enhancing the resilience of the banking sector has also been a key area that we have worked upon during the last years, especially the last year, because it is setting the stage for the future. The non-bank financial institutions have also been on the upward rise. Trends in accommodation, trends in deposits, non-performing advances have had a spike, small one though, but again, something that we need to manage for the future. But again, we can be confidently saying that it is reasonably stable. The directions that have been issued have also been quite extensive, and we have given instructions in all different areas. Particularly, the new feature that we have added is the provision of liquidity support. And I can assure you that the central bank, particularly the Monetary Board, has been keen to ensure that this word where we have been talking about weak financial institutions are dealt with in a sustained manner, and they're dealt with for good measure, so that we don't have to revisit those again and again. That is why the massive consolidation program was implemented. That is why we put our money where our mouth is. When there was a need to provide liquidity, we have done that. We have ensured that the level of confidence is enhanced, so that we can look at the future of our system with a greater deal of confidence, where we don't have to look behind all the time to see whether any problem is occurring. And the instances where we had finance companies, weak finance companies facing problems, we want to put that behind us forever. And that's a tough call. It needs several measures which are strong and at the same time well implemented, and that's what is being done in the years to come as well as now. And the consolidation program is today being looked at by many others from all over the world as one that has had a lot of careful and meticulous planning, and I want to thank all who have contributed to that. Our own team, we had a consolidation unit headed by our assistant governor, and at the same time all the banks cooperated together with the accountants, the lawyers, the stock exchange, the SEC, the Register of Companies, the Commissioner of Inland Revenue. All these institutions worked together, and I believe in due course it will be hailed as a very interesting case study, because all these different stakeholders had to work closely together, including the Ministry of Finance, who gave the necessary impetus by providing the tax incentives. So all of which helped us to bring this to a very successful situation, and we need to continue that for the future as well. We would see the collaborated efforts that were taken to enhance the quality of the social security structure. Again, one of the challenges of the good times or the benign conditions is that we now had a situation where some people who were relying on interest income had to deal with a new challenge, and that also had to be faced by the monetary policy makers as well as the government. And today you have seen how the President had in his budget speech articulated the policy where senior citizens would be entitled to a 12% interest rate, which has now been announced. We have thought through that carefully and announced that. We have also provided other citizens who are more than 55 years of age. The senior citizens are those who are above 60 years, as is normally considered. But those who are above 55 years also have been provided with a space within the finance companies to also have a greater or a higher rate of interest, which ensures that there are people who will be covered in all parts without bringing any distability to the institutions, and at the same time allowing the people who are getting into a stage where they have to adjust their incomes can also benefit by the policies that we have put in place. We have had many programs to create awareness about the prohibited schemes, and those have been effectively put in place. But we still have some people who still move to these prohibited schemes, and we would like to once again reiterate that the best way of ensuring that these prohibited schemes do not take place is by not participating. And the amount of education that we have put in place is tremendous. We will continue that, but we hope that this message would be taken by others as well in time to come. The payments and settlement systems have been further strengthened. We now have a common ATM switch to which many banks have subscribed. So as a result, someone else's ATM now becomes your ATM as well. So as far as the customers are concerned, they can now go to 2,500 ATMs and transact business of their bank at those ATMs, which earlier they had very few because each bank had their own ATMs. Today we are trying to bring in kind of a common switch which would ensure that everyone working with any bank can go to any ATM, so that we will have 3,500 ATMs right across the country for all the citizens who can access any ATM, who can access his bank or her bank through any ATM that is there in the country. We have focused on regional development, and the Regional Development Department has also provided many loans as well as schemes for the improvement of the rural areas. And Sri Lanka has now showcased itself as a rapidly improving financial inclusion program. We have also ensured that the FIU, the Financial Intelligence Unit, will maintain the integrity of our financial system. We have implemented many liberalization processes in our exchange control, so much so that today there are many transactions that can take place without having to come to the central bank at all. And hopefully, in time to come, this series of liberalizations would enable many people to go about their foreign exchange businesses without having to come to the central bank at all. The stock market has seen also a revival, a huge improvement. The ASPI has doubled in just 5 years, from about 3,300 ASPI in 2009 to 7,299 by 2014, and lots of IPOs have also taken place where money has been raised, and about 3 trillion rupees is the market capitalization now. The corporate debt market has also improved from 2013 to 2014, although the pace at which it has grown is a little less, particularly because there were funds that have been raised. There have been plenty of funds in the banking system due to the high liquidity. The EPF investment portfolio is something that I need to talk to you about. It has grown from 2005 to 2014 by about 3.5 times. It has been one of the massive increases in the total portfolio, the growth and the diversification. The asset base from 2009 to 2014, I think we need to look at the next slide. Yeah, has also doubled. We have seen the EPF's performance being better than most of the other institutions that provide long-term benefits. So there has been a lot of improvements as far as the individuals are concerned who have invested in the EPF. The total number of member accounts has increased. The assets have doubled. So there has been a massive improvement in all the activities there. And the year 2014 has been a very good year because the total income of the fund grew by about 21%, and the ROA in 2014 is about 10.56%, which I believe is much higher than what many banks can also generate in their own institutions, and that I think is an important factor for us to reflect upon. And there was a lot of criticism of the EPF when it invested in the market, where that there were unrealized losses. Of course, many people who were making the criticism, Mr. Secretary, forgot to mention that there is unrealized losses. But nevertheless, we took a lot of flack, and there were many who questioned the decisions of the Monetary Board that it was not prudent to do so. But today, when the EPF portfolio has an unrealized profit of about 12 billion rupees, those critics are quiet. Perhaps the whole premise on which they submitted their thoughts filing action, going to the Supreme Court, going to the road, have now disappeared because the long-term decisions that have been taken by the EPF is today being seen by the public, by the stakeholders, and in a situation where interest rates are coming down. It was one of the best decisions that the EPF management could have taken by moving into the stock market, making strategic investments, which would be one of the biggest cornerstones in their investment portfolio in time to come. So it was done at the right time, and although there was a decline for a couple of years, and people were making a big noise of that time, you could now see that the whole complexion has changed. Those critics are silent, but had we not taken those decisions at that time, as a monetary board, as a central bank, as the EPF, you would find that we would have lost a massive opportunity that presented itself, and that would have been not to the detriment of the management of the EPF, that would have been to the detriment of the beneficiaries of the EPF. 12 million of people who have invested their money as a result of the savings that they are making each year. So I can tell you that that has been the right decision, that has been vindicated, and those who have made those calls would probably now have to rethink some strategy as to what to say next. The contribution of the funds have grown in year to year. In 2010, it was about 50 billion. Now it is now it is 100 billion. So a huge improvement has taken place there as well. Economic activity was supported as a result of what our currency department did. You would find that we are now having cleaner notes. We are trying our best to ensure that the notes that you use are crisp and nice and clean, because that reflects the image of the country as well. Currency notes are not just used for transactions, which is the prime purpose, but it also portrays the cleanliness, the image of the country. So we are keen to ensure that when a tourist has a 1,000 rupee note in his hand, that it will be a clean, crisp note, which they will then form an opinion of the country as well. Not only would we have clean roads, clean cities, but clean notes also are helpful, and we are working towards that. We have launched a new series of 10 rupee coins, which depicts each district's identity, and that's something that we took a lot of interest in doing, and I hope that you all will also collect those coins as well as use them well. Coming to debt management. Today, Sri Lanka's public debt is about 7.4 trillion rupees, and the GDP is about 10 trillion rupees. And of the public debt, domestic debt accounts for about 43% of GDP, and the foreign debt about 32% of GDP. And we have seen, if we look at the slide on the side, on the right-hand side, the declining debt to GDP ratio, as well as the declining ratio of the foreign debt, even though we have been having issues to the international bond markets. As a composition, we have been able to establish a lower percentage as far as the foreign debt is concerned. The term structure has been improving, and you can see the bottom, the government securities secondary market yield curve is much longer now than in the past. Earlier, we used to struggle in 2008, 2009, we used to struggle to issue a 5-year bond. We used to struggle to issue a 2-year bond. Today, we don't have much difficulty in even issuing a 30-year bond. Now, that's the difference that you see in the perceptions of people as to how they see a long-term call in an economy. The first request for a 30-year bond came from foreign sources, where they said, why don't you all issue a 30-year bond? We have sufficient confidence. So someone to take a call of a 30 years in an economy is not easy. Earlier we used to struggle to roll over the debt of 3 months, 6 months. Now that has changed. And that's another important part that we need to sustain and carefully nurture, because the longer the debt and the longer the debt profile and the average time to maturity, you would find that our own country's debt position becomes that much more viable. So that adjustment is taking place, and you can see that in the next slide, where the average time to maturity. In 2005, the average time to maturity was only 2 years and 4 months. So that means every 2 years and 4 months, our domestic debt had to be rolled over. So the shock, the changes, as well as the uncertainty was that much greater. In 2009, at the height of the war and the end of the war, it was 2 years and 3 months. Again, a difficult time. Today, it is nearly 6 years. In a short period of just 5 years, we have been able to ensure that the uncertainty levels of our rollover of our debt stock has been reduced to a minimum. So today, when we issue debt for longer periods of time, and if you look at the top right-hand side graph, you would find that we have 27% of our debt now over 10 years. We have 15% of our debt between 5 to 10 years. We have 43% of our debt between 1 to 5 years, and only 15% of our debt less than 1 year. As against in 2009, we had no debt over 10 years. We had 12% of our debt over 5 years. 68% of our debt was between 1 to 5 years, and 20% of our debt was less than 1 year. A massive structural change has occurred. As a result of that, we have stable interest rates, we have a stable debt management system, and that is another massive change that has occurred as a result of prudent debt management, and that is one of the benefits of having a stable currency, stable economy. Foreign holders of treasury bonds have also been eased over the last several years, and that's another important part of our debt management. At the time when our interest rates were high, we issued up to 12.5% of our debt to be held by foreigners who could then have up to 12.5% in rupee debt, for which they would have brought money from outside. Today we are gradually tapering that off. It's not that we want to reduce it dramatically, but as and when the maturities take place, we are hoping to replace that with firm tenor bonds so that the risk that we would have is reduced, as well as the way in which our debt is set out and described in the country would also change. So that adjustment is also taking place, and even at the time that the quantitative easing was taking place, we didn't increase our 12.5% margin, but now it is being gradually contracted, not by putting any pressure on any foreign investor, but as and when the maturities take place, we might ease that system in order to ensure that we make our own debt fundamentals a lot more sustainable. Another important part about debt is how the interest cost of the debt has been also managed. In 2009, we used to spend 6.4% of GDP on our interest. Today, it has come down to 4.4% of GDP. Another 2% reduction, which is a very important part, and that's something that we have been able to achieve as a result of the longer term tenors as well as the longer term vision that has taken place. So in summary, my dear friends, all the substantial progress has taken place in almost all our macro fundamentals, whether it's FDI, whether it is gross official reserves, budget deficit, growth, all those have been on the right side. What has to go up has been going up. What has to come down has come down. So that's again another challenge, because we need to ensure that that path is maintained. Let's now look at a few of the outside views of our economy. There are different institutions which rank countries based on their own parameters, and one of the key ways in which countries are being ranked is about the global prosperity, the Human Development Index, and Sri Lanka ranks above all our South Asian peers in that. We are first in South Asia in the Global Prosperity Index. We are first in South Asia in the Human Development Index. We are also a close second in the Global Competitiveness Index prepared by the World Economic Forum. India is the 71st position and Sri Lanka is the 73rd position. Now if you look at Sri Lanka's position, we are in South Asia. All our countries had the independence about the same time. Sometimes it's difficult for us to fathom when we as a country which is 66 years old, we are sometimes assessed with countries which had had freedom for 200, 500 years. At the time when Sri Lanka became independent, we had only one university. After 443 years of foreign domination, we had only one university in 1948. We had only 221 schools that taught English and mathematics. Today that has changed. Today we have 17 universities in just 66 years. We have more than 10,000 schools teaching all different subjects. We have Mindodaya schools, Secretary would probably tell you, which now have been positioned to be on par with some of the Colombo schools. So that adjustment has taken place in a very short period of time, my dear friends. So when we look at these international rankings, we have some countries which have been able to have their own governance systems, their own procedures for hundreds of years. We have had this remarkable journey in only 66 years, and that too, out of which we had 30 years of war. And in the last 5 years, we have been able to build up on that strength, and today we have seen a movement which is something that we need to be proud of, and sometimes we need to also recognize and be happy about. Of course, we are not saying we are perfect. We have still more space to go, as I would explain, but we need to work on that diligently. So, global competitiveness, we are a close second. In the case of Index of Economic Freedom, we are first in South Asia. We are first in South Asia in the ease of doing business. And if you look at rule of law, again we are first in South Asia. Corruption Perception Index, other than Bhutan, which has a kingdom, in all the other South Asian countries, again we are first. We are only second to Bhutan in South Asia. And that shows that we have moved quite a bit. And in summary, if you take the international rankings, you would find that in most of the areas in South Asia, in all the rankings of the different institutions that are doing these rankings, rule of law, freedom, economic freedom, global prosperity, ease of doing business, human development, we rank first. Global competitiveness, we are a close second. Corruption perception, a close second. And out of Asia and Pacific, we are in the first category of the first 40% of the countries. And in the world, if you take the entire world, we are in the first half. So Sri Lanka is in the place where we could not be ashamed of, but at the same time, we can work harder to get to better places. But in all these rankings, we are somewhere up there, and we need to now work on those as well. And positioning other global rankings, if you look at the brand value, the tourist destinations, offshoring destinations, global innovation, Forbes best countries, IT, e-government, all those we have done quite well, and we need to continue those as well. We have been given some accolades once in a way, sometimes mainly by outside agencies, IMF. I'm glad that the IMF representative is also here. They say that the Sri Lanka's economic growth has been one of the fastest among Asia's developing economies. Inflation down. Those are important. But we have also seen a lot of criticism, which we take on board, where we look at sometimes people say that when you have single-digit inflation for 5 years, that we are getting into another trap, or that question marks about the independence of the data. All that is something that we look at, and we also sometimes respond, sometimes we don't. But we are conscious that sometimes there are instances where people might have different perceptions, and we believe that they have also the right to do so. But all along, we have also communicated. If you look at the number of advertisements, the press releases, we have issued in the last 1 year, 1,696 press releases. So media would probably know that. I myself have, I'm told, given 430 speeches. Our office tracks the number of times I talk, so maybe I talk too much. But nevertheless, we have communicated clearly, articulated our policies at every possible occasion, so that we have a transparency that we have also endeavored to provide to the market. So the last 5 years have established a solid platform of macroeconomic performance. And now, let's take a quick look at what's in store for the future. Our goal is to support a per capita income of $7,500 by the year 2020. That has been articulated by the Minister of Finance. That has been provided as an overall guideline for the country to aspire for. Secretary Treasury will probably also speak to you about. But this year, by the end of 2014, we would have a per capita income of about $3,654, which means that we'll have a GDP of about $75.6 billion. And we have also charted the path as to where we would move in the next several years, taking us up to $7,500 by the year 2020. And the medium-term macroeconomic framework to be consistent with that movement has also been tracked. So it's not something that has been done in a haphazard manner, very carefully thought through numbers, which will be how we would move year on year to the 2020 targets has been also established. And you would see that in one figure, the current account balance, we see a turning point come 2018, where the current account balance in the external sector would turn to be a positive number by 2018. An important milestone that we need to work towards. And if we have that, you would find that the whole structure of our economy once again changes. And that's a number that we need to watch out for carefully to see that we deliver that, because that would mean that our external account and our external sector becomes that much more stable by that time, and we need to work towards that in a gradual manner. Broad money growth would be one of the significant numbers that we'll be looking at as a total figure, and each year we have tracked or we have set out what we would be aspiring to deliver, and that's something that also we will be working towards in the future. Those will be the numbers. Then we will have to deal with certain international challenges. There are a few quotes that have been given by Governor Raghuram Rajan, Governor Menon from Singapore. Myself, very modestly, we are attempting in the international sense to tell our own stakeholders that we need to build some cushions. We won't know what the next shock would be. We have experienced many shocks in the last 7 or 8 years from all quarters. And those have been very well managed, because some we have responded quickly, and some because we have had the shock absorber to take the shock initially. The way that we can deal with some of these bigger shocks is to have an absorption capacity. And that's what we have built up over the last several years in our economy. Every single number of the macroeconomic fundamentals has a shock absorbing capacity. There is a cushion in every number. If you have growth of 7.8%, we can take a little bit of a shock and experience a lower growth. If you have inflation at 3.3%, we can afford to make it go to 5% without too much of a difficulty or too much of a shock being transmitted right down to the economy. If you have a fiscal deficit of 5.2% or 4.6%, if it goes up to 5.5% or 5.9%, that's a shock that we can take. But in order to be able to take the shock, you must have the space. And that's the space that we have attempted to build up diligently over the last several years. We need to build more, because the next shocks that will come from all over the world could be even greater. Sometimes shocks don't tell you when they're coming. They don't say at what momentum it will come. So we need to have the space, and that's what we will need to build up over the next several years. And our international challenge would be that to develop the shocks absorbers, to take the shocks and to have the cushions. Internally, also we will be looking at several features in our monetary policy, the domestic challenges, to guard against the formation of asset bubbles. Fast-growing countries sometimes have bubbles formation, which can sometimes cause serious amount of instability in an economy. We will be watching out for that. We have special teams who will be working on that to ensure that we are able to have a sustained economy. We will have to balance the effects of low market rates and the banks taking risks as a result of the low interest rates. Naturally, there is a greater deal of enthusiasm for banks to lend, for businesses to work when the low interest rates are prevalent. So we need to be conscious of that as well. We need to manage the effects of low market interest rates on depositors. Until such time that Sri Lanka has a good system of superannuation funds, which some of the banks are now putting in place, as well as the insurance companies are putting in place. I'm glad to see the chairperson of the insurance board also here, because they will have a big challenge to have a greater number of superannuation funds that will come in, because in the future we'll have to ensure that it's not only by the interest rates that the senior citizens could have their retirements worked out. There will need to be specialized instruments. Those days, those instruments were not popular because the interest rates were very high. Now, when the interest rates are gradually declining, those instruments will become popular. Insurance companies will become a lot more relevant. And we need to ensure that that participation also is captured in our economic activities for the future, and we will have to work towards that as well. We have to deal with the trade-off between stability and growth, a perennial difficulty. How much growth, how much stability, how much inflation? We will deal with that, and we will have spaces created for that as well. Manage the aggregate demand of a population with rising per capita incomes. When the per capita incomes are rising, that's another big challenge that countries have. How much and how will we manage that process? Again, a tough poser for the team of the central bank. I know they're up to it. They have the research capabilities. They have the ability to understand these phenomena. And as a monetary board, I can tell you, I would like to tell the central bank officials who are here today, we'll rely on you to give us the guidance as to how to deal with those aggregate demand changes. We'll also rely on you to give us the guidance as to how to deal with the middle income trap. I know last year the central bank reflected on the way the middle income trap could be addressed, and we already have many strategies for that, but we'll have to now put it into practice properly so that we can seamlessly go past the middle income so that nobody knows that we have gone through the trap. The best way of progressing through a trap is to not fall into it. There's no use saying we fell into the trap and now we are in difficulty. The way to deal with it is to go past the trap without anyone knowing that we have gone past. That's what we are trying to do, and hopefully the policy that will be put in place would be such that none of you would know that we have gone past the trap, and we can look back later on at $7,500 per capita income and say we didn't struggle through that trap like what such and such a country did. And that's what we would expect the top brains of the central bank to provide us with guidance, and I'm confident that they would do so. So our macroeconomic stability will be the key goal for the future, and that will be with 4 components: the price stability, external stability, fiscal stability, and financial system stability. All these need to work together. We cannot have one without the other. If we have one, then we will know all about it. That's why every single part of that equation needs to be handled carefully. And again, that's something that I can assure you as stakeholders of our country, that we would be working closely and well to ensure that that is also done. The monetary policy framework would be strengthened to ensure macroeconomic stability. A flexible inflation targeting framework will be what we would follow. And at the same time, we will ensure that the consumer price index is relevant. I remember in 2008, we were looking at a consumer price index which was based on the behavioral as well as the consumption patterns of the Sri Lankan population in Colombo in 1950. That didn't even have telephones, that didn't have tuition classes, that didn't have certain private sector drugs. All that had to be captured. Now today we have a new base which is based on the survey of people's habits as well as their consumption patterns, and that also will change, especially in a country where the per capita incomes are rising fast. So for us to take monetary policy decisions, we need to see that those changes are captured, and that's something that we will like to see for the future as well. So this grid shows you how this whole thing is done. It's made to look very complicated so that you will be all impressed. I can assure you it is complicated, but at the same time there are many components that are there which are all addressed, and that's why we have captured it in this grid, because each one of those factors have a bearing on the stability of our country, on the stability of our economy. And here I would like to reflect on 2 areas, which is the guidance that we receive from 2 key committees of the Central Bank, the external committees, the Monetary Policy Consultative Committee, as well as the Monetary Policy, as well as the Financial System Stability Consultative Committee, all of whom provide us with a private sector dimension of the policy network that we have to capture in our own decision making. We want to appreciate your work in that field. Many of you who devote your time for us, come for many meetings, give us the insights that you have also acquired over so many years with experience, and we appreciate that very much because you bring in a new dimension to our own decision-making process so that we have the robustness of your thoughts, which has been extremely useful to us, and we want to say thank you to you for that as well. Our inflation expectations would be in the medium term in the next year, that is year 2015. We believe that we would be having a lower tolerable range, mainly because of the reduction in the prices of commodities. So we think we should be able to have a range of around 2 to 4%. But going beyond that, we would be comfortable with a range of about 3 to 5%, and that's what Sri Lanka would be aspiring to have. And the central bank would be having our policies, structuring our policies on that basis. We would also be looking at the monetary aggregates, as I mentioned, the call money rate, and those two areas will be two of our operative benchmarks that we would be looking at, and those will be carefully thought through as well as monitored in order to ensure that any risk that is building up would be addressed in time so that we would be able to address those issues at a reasonable time in a time before it can become any difficult. Same time, our communication policy will continue. We will ensure that we would have a close rapport with the media, with our stakeholders, so that you will know what we are doing. You will know the rationale behind what is being done by the central bank, and that would be helpful in your own decision-making processes as well. Our monetary policy would be based on a target of having 8% growth over the next several years. Those red numbers are there. You would find that the step-by-step improvement of our economy over the last several years has been an important way in which we have progressed. A tough call to ensure that it is sustained, but we believe that the types of policies that we have put in place will take us that way. At the same time, we have now built up a new potential output growth as a result of greater availability of resources for productive activity, massive investments in physical infrastructure. I have seen sometimes some people saying that Sri Lanka does not have the capacity to have a 8% growth. Now, that is because they have not gone through carefully the new additions that have come into the structure of our economy. Our structure of our economy has changed. We have built new infrastructure. We have built new capacity. We have got new areas of development which will be the drivers of economic activity for the future. Now that has to be also factored in when you look at the potential output and the potential output growth of the economy. Now if you factor that in as what has been done by our own key persons here, you would find that we are now having the ability to have a greater growth on a sustained basis for the future without having to undergo the pains of high inflation like what has happened in sometimes in the past. So rising productivity will have to be also provided with attention, increased attention on improving the social infrastructure. All that, if it continues, we can without hesitation say that Sri Lanka can achieve the 8% growth without having to go through any pangs of problematic problems in the future. The 5 hubs I have already spoken to you about. It has many components, all of which will have to be put in place. The maritime hub has certain features which are ingrained as well as having the ability to take us forward. Especially the investments that we are looking forward is about $10 billion in the next few years. The aviation hub will see improvements to the Bandaranaike International Airport, the Mattala Rajapaksa Airport, as well as the Sri Lankan Airlines fleet. We would see the energy hub taking shape with the new hydro projects, new coal power plants, the energy exploration, particularly the hydrocarbons, as well as the non-conventional renewable energy sources. We would see education being looked at for the future. We have all these institutions that are there. On the right-hand side, you can see 50 national universities, 2 Buddhist universities, 17 higher education institutes, 10 degree granting institutes, 12 advanced technological institutes, 42 professional institutions, 643 private vocational training institutions, 525 government vocational training institutions, 15 research labs and institutes, 1,000 Anasara centers, 10,012 national schools, all of which provides a huge capacity for us to have the soft skills and the preparation of soft skills for the future. We need to make use of that. We need to ensure that all those will provide the number of people as well as the quality of people that our business would demand for the future. That's up to us to have a collaborative effort, and I believe if we do that, we would be able to ensure that Sri Lanka has a seamless supply of top quality people to take our country forward. The commercial hub is another area that we are looking at to develop Sri Lanka as the foremost center in the region to do business for the future. We're looking at new types of laws that will help for people to come and do business in Sri Lanka with greater ease. Establishing Sri Lanka as a global financial and business center is another important facet, because we have the climate, we have the location, we have the strategic sea routes, we have the location in Asia, the availability of educated workforce, all of which can position Sri Lanka well in this global financial center, and we need to work on that as well. A diversification of the industrial activity is also something that we would be expecting to see for the future, and especially the current account, in our view, would have a massive change for the future. Take a look at the 6 key numbers that are set out at the bottom of the slide. Merchandise exports, we believe, from the current level of $11.4 billion in 2014 would rise to $22 billion by 2020. Tourism will rise from $2.3 billion to $6 billion, with about 4.5 million tourists coming into Sri Lanka by that time. Transportation will provide us with a new dimension of income from about $2 billion to about $4.7 billion. Workers' remittances will have a more modest increase because of the numbers. We'll have to come back to Sri Lanka also to take our positions here because of our own expanding economy and our economy's ability to have people with high incomes coming in and serving here because the expansion that is taking place. We would see that moving from about $7 billion to about $11 billion. ICT would go up from about the current $800 million to about $2 billion, but I was happy to see the ICT professionals saying that they can do much more than that, and they would probably be able to reach $5 billion. Well and good, these central bankers are generally very conservative people, and they always have a factor by which they bring in a certain conservatism to some of those estimates. But be that it may, we can still be comfortable with 2.2 billion, but we'll be much happier with 5 billion, and I believe the industry believes so, and they are working towards that. So is the tea industry. Recently I heard the exporters of tea saying that they can also look at a $5 billion industry by 2020. Again, a certain confidence that they themselves have generated is an important facet, and we would be happy to be proved wrong in these numbers. If we are told by others that they would be able to do better, and they have plans which will take Sri Lanka forward at a much faster pace, and they have got the capacity to do that, we would be happy to see that happening, and we would change our figures because we believe that there is capacity, there is a possibility, but we don't want to be over-optimistic, but let us see how the industry would also see these changes taking place for the future. As I said earlier, 2018 would be an important year for us, where we would have to be looking at seeing a current account surplus in our external sector, and we would be looking at that number carefully to see that as a turning point in our external sector. We also would like to see the other exports, the normal exports, also improving, particularly textiles and garments, tea, rubber products and petroleum products, all of which have tremendous capacity for the future as well. We hope that the export of goods target would also be put in place because there are many facets that have been developed, especially in our ports, our airports, all of which will provide the ability for these businesses to do better in the future. Workers' remittances I already spoke to you about. We would have a more modest growth in the future. And in the medium-term growth, we would see that we will be keeping a close tab on the money supply. The central bank's job is to provide you with the stability. While all these things are taking place, when the party is going on, We don't want to be dampening the party, but at the same time, if need be, there may be instances where we have to dampen the party a little bit, because sometimes parties can get out of control. And when parties get out of control, the adjustments that need to be put in place could be quite severe and could be sometimes too severe, and it can be a greater shock for the industry and the business to adjust. So we will sometimes give little pinpricks to bring that into shape, to take it in the way forward that is important for us to go forward, and we hope that you will understand that as well. Sometimes we become quite unpopular with certain measures, but hopefully some of those measures are for the economy's good, and it's sometimes only seen many years later. So we would like you to have that understanding as well. And we would also promote other sources of financing in the medium term, particularly inflows to government, FDIs, portfolio investments, private equity, all of which are now having massive capacity being built up for the future. Over the next few years, external financing will also be a key source, particularly FDI. You will see, as time goes on, with the greater deal of confidence that our economy would have, we would see a large amount of foreign direct investment also coming in. The way we have been seeing it has been good. The way we have seen our order book, if you may call it that, filling up is also impressive. And it has not come in too fast, which has put undue pressure on the monetary policies. But we can see that as time goes on, we will have the ability to sustain a greater level of foreign direct investment in our country, which would bring greater deal of comfort as well as a great amount of stability to our nation. We will be searching for, in the next few years, ensuring that our short-term debt, especially our foreign short-term debt and liabilities, is matched by the reserves that we have. So not only will we benchmark our reserves for the next several years to the traditional method of looking at it from the point of view of the number of months imports, we will also be looking at how much of it is covering the total amount of external debt short term. So that's another change in the way that we would be reflecting as well as articulating our policies, and we would be looking at that also in time to come. We would be also looking at our foreign reserve management, where we would have a greater diversification, where we would have more regional level cooperation. Those pictures that you see are two important areas of cooperation that we have developed with India and with China, where we have been able to develop swap lines, where we have been able to have the ability to invest in each other's instruments, so that we have a new development process for our reserve management as well. That's an important change. It's an important way of doing business as far as reserve management is concerned, and we believe in time to come we would be able to gradually grow that feature in our reserve management activities as well. The government has informed us that they will also be having the ability to control the recurrent expenditure, the government revenue as well as public investment, all of which have been factored into our numbers. The last several years we have seen a lot of cooperation between the fiscal and the monetary sectors. There has been a very close rapport. We have been able to generate a great deal of understanding in the way Sri Lanka's business will be done, and that has helped both institutions, both the Ministry of Finance as well as the Central Bank, to ensure that greater stability is managed. The budget deficit also has been committed. These numbers are from the budget speech of the President, and I'm sure the Secretary will also speak to you about it. And we have also been happy to see that the government is committed to the outstanding government debt to be brought down on a staggered basis in time to come as well. The challenges in the labour market would also need to be addressed with the emphasis on enhancing productivity, and policies such as extending the retirement age, introducing flexible working hours, providing good quality childcare facilities so that women employment can also be enhanced, further improving technical, vocational and higher education facilities may also be needed to be considered in the future. And we would do studies on these subjects to be able to provide a new resource to the government to be able to address those areas as well, because we believe that in time to come we would see another change that we'll see in the way the number of people who are employed in the different sectors are also changed in line with the total contribution that they make to the GDP composition as well. We have set several targets for the financial sector. The banking sector would probably have 18 trillion rupees worth of assets by the year 2020. And there will be several banks, at least 3 banks, who would have asset bases in excess of 2 trillion rupees. At least 5 banks to have a regional or a global presence, a strong NBFI sector. A global financial and business center would be established under the commercial hub concept, all of which will change the way in which the Sri Lankan banking community would work as well for the future. The effective strategy for 2020, we have already articulated at the Bank Directors Symposium, where we spoke about the need for financial inclusion, developing fee-based products, to be actively involved in infrastructure development projects of the country, support business revival efforts. We are very particular that the banks would be having units which will support business revival, because we believe in time to come we need to protect entrepreneurs as well. Entrepreneurs are the lifeblood of a nation. There will be entrepreneurs who will get into difficulty. We have to recognize that. But as and when they get into difficulty, we can't strike them off from our register. We have to nurture them back into good health. Just like a person can get ill and needs to go to a hospital and get treatment and get back to good health, sometimes businesses also have difficulties at different times. We need to look after them. We need to give them new skills. We need to bring them to a level where they can be revived once again and to be of service to the nation. We need to have new laws for that. We need to have the right attitude as far as the bankers are concerned, and we would be promoting that also in time to come. We would like to see the bankers having regional presence. We need to have new banking products. We need to see the banks supporting the sovereign rating process. The banks must recognize and understand that their rating internationally cannot ever be higher than the sovereign rating. So you are part of an overall process, and you need to also be conscious that the country's rating has to be improved if the rating of your own banks or your institutions are also to be improved. So let us work together on that area to see how we can improve as a whole, and so that we can have a better rating overall. The banking system will go into the Basel III framework commencing 2015. The minimum capital requirements will also be adjusted, particularly for the local banks. We are not going to do that for the foreign banks, because we realize that the foreign banks have their mother banks outside, and they'll be able to provide the comfort for that change. And the safety net that we will be building up with deposit insurance, with resolution plans and information security will also be extensive to ensure that Sri Lanka can have a very sound banking system. Several other strategic measures as setting up a business revival unit, expanding the reach. We will no longer be insisting that the banks should have 2 branches outside the Western Province for every single branch that you have in Colombo or the Western Province. We believe now we have reached a certain maturity level. We would allow the banks to have that decision, because you have already penetrated sufficiently into the peripheries, and we would be happy to see that you would have your own business decision on that without having to go through another constraint. But at the same time, we would like to see you having SME business development centers, because we need to ensure that 70% of our people who are involved in small and medium sector enterprises are also supported with some encouragement to do better and to become bigger institutions for the future. We would require the SLCs to be upgraded to the state of LFCs as far as the non-bank institutions are concerned. We will develop the ATM switch. I've already spoken to you about that. And going forward, the medium-term public debt management would be looking at ensuring that Sri Lanka's public debt, domestic to foreign mix, will be around 65% to 35% come 2020. And to limit the interest cost to around 4% of GDP from the current 4.4%. Again, a shift towards greater stability and to be able to have a greater strength in dealing with any shock that we would have to face for the future. And the ATM, the average time to maturity, would also be enhanced. And we're looking at 2020, where the long-term debt of our country would be around 51%. And that is over 10 years. And the 5 to 10 years to be around 28%. So a massive chunk, about 80% of Sri Lanka's debt would be long-term, which will reduce the vulnerabilities as well as the risks of our country in going forward, which would ensure that we'll have a much more stable economy going forward. The central bank will also work hard towards ensuring that Sri Lanka's sovereign rating is improved. We'll work together with you as well as the Minister of Finance to ensure that we become a lot more stable, and that would improve our current rating. And we will also take steps to help those who are dealing with the improvement of the infrastructure, particularly the debt securities, to strengthen the payments and settlements systems in order to ensure that our systems would also improve in line with the rest of the economy. We will establish a state-of-the-art currency processing center by 2017. We are already taking steps to acquire the space necessary for that. We would have to deal with that in a very professional manner, and we're working to that. And this year we would see 3 new commemorative coins being issued, firstly for the 150th anniversary of Srimat Anagarika Dharmapala. Then we will issue a commemorative coin for the visit of His Holiness the Pope, and also another coin which would be issued for the anniversary of the 75th anniversary of the Bank of Ceylon, one of our longest serving and viable institutions in our country, and we would be doing that as well. Exchange control policies would be further relaxed, and we have a scheme as well as a timetable for that. We will ensure that there is affordable finance for the SME sectors on a consistent basis, and the key basis on which Sri Lanka's central bank would support the external the SME financing would be through our Saubhagya loan, which promotes, which supports the small and medium sector. Women empowerment will also be supported through our RDD, our Regional Development Department. We will ensure that the EPF has a proper implementation of the diversification strategies, particularly in the context of the low interest rate regime. Already the Monetary Board has given the guidelines for the EPF management to take the necessary steps for a diversification, which ensures that the rate of return could be substantial and substantive, especially because we will have to deal with a low interest rate regime. It will have to continue to improve its services, to have a paperless society, to be able to access accounts through different media. We are also working closely with the Stock Exchange and the Securities and Exchange Commission to reach the targets that they have also helped establish for market capitalization, the GDP market capitalization, average daily turnover, all of which needs clearly focused strategies. So my dear friends, that captures the basic ways in which we would want to move forward. And the last 5 years have been especially interesting as well as exciting. Many people ask me at different times when I am interviewed, particularly by the foreign media, what keeps you awake at night? It's a famous question that the foreign media ask me. Actually, I've been thinking of that many times. And what strikes me is when you go out into the road at about 1:30 in the afternoon, you see thousands and thousands of children coming out from the schools, all happy, laughing, joking, sending text messages, talking on phones, getting picked up by their mothers and fathers, some by their friends, having a great time. 400,000 such children come out into the job market or the livelihood market every year in Sri Lanka. Now, if you have a single year when they are not catered for and they will not have opportunities to get into the livelihood of our country, to be citizens who are going to contribute to the economy, you would find that there will be 400,000 disgruntled youth. If you have 2 years without a pipeline of projects that will employ them or provide them with livelihood, you would find that that number increases to 800,000. It can get out of hand very, very quickly. So we need to, like how you would plan your own factory output by looking at your order book to see whether you will have orders for September, October, November, December. Countries also must develop order books where there will be investment made which will generate the livelihood, investments made that will generate the jobs, which can absorb all these people who are coming out into the market. That, my dear friends, keeps me awake at night sometimes, and I hope it will keep you also awake, because you are the people who have to support our country's economic drive to ensure that the creation of jobs takes place with the investments that you make. Our job is to make sure that the conditions are right for you. The government, I know the government works very hard towards that, as well as the central bank. Our job it is to ensure that you have a platform on which you can make your own calls. So try to stay awake at night once in a way and reflect on that, because that will tell you we need to ensure that that is done for the future. So with that thought, Sri Lanka's central bank would look at the next 6 years on having a stronger economic performance. Our conduct of policies would be a combination of monetary policy, financial stability policy, exchange rate policy, and the investment policy. In all these, we would assume that there will be political stability as well, because we cannot work in a vacuum. We need to work in a system which is also stable. There are many times, many occasions, Secretary Treasury will probably tell you, where we have drawn on the political stability of the country in order to make certain changes in the economy. Without having that stability, without having the ability to make certain changes which will be supported by the people, however great your reform agenda could be, those cannot be implemented, because if the people will not accept it, because they don't have the political will to accept it, or the government does not have the political will to ensure that it is implemented, those things won't happen. Sometimes we may speak about this in lofty language, but for it to get down and to be implemented, it needs a political will, it needs the political goodwill to be able to be put into shape and to take it forward. We would like to thank many people who have helped the central bank during the year, particularly the President and the Minister of Finance, His Excellency Mahinda Rajapaksa, for giving us admirable leadership, giving us the political space as well as the ability for us to make certain economic decisions which have been backed by the political framework and the political stability. The Senior Minister for International Monetary Cooperation and the Deputy Minister of Finance, Honorable Dr. Sarath Thamulagama, who has had to defend us at different times from various attacks in Parliament as well. I want to thank him specifically for doing so. Secretary to the Treasury, Dr. Jayasundara, who has one of the most difficult jobs in the country. Lots of times thankless, Dr. Jayasundara, but we thank you because you have been able to give us the space and the governmental backing as well as the governmental strategies that have been put in place, which has supported the central bank's ability to take certain decisions as well. Thank you very much, PB. The members of the Monetary Board, Mano, Nimal and Neil. Neil unfortunately couldn't make it today because today was the first day that his company was also having their day, both of whom have been great towers of strength to me personally, as well as to the Monetary Board in taking our decisions. Our Deputy Governors, Dr. Nandalal Veerasinghe, Mr. Ananda Silva, and Mr. Samarasiri, always have been at the forefront of the decision-making process of the Central Bank, and we appreciate the work. Swarna, the Director of Economic Research, as well as the Economic Research, as well as the Financial System Stability to Assistant Governors, Mr. Siriwardhan and Mr. Lanka Tilaka, as well as all the other Assistant Governors, heads of department, as well as all the others, every single person who has contributed in no small measure to bring these results. And last but not least, I also want to say thank you very much to the consultative committees who have been extremely helpful to us, who have given us guidance as well as their suggestions, which we appreciate tremendously, and they come from the busy private sector, and we appreciate your efforts as well. So as we move from strength to strength, today I want to pay a special thank you to our talented staff. We have some very clever, well-qualified, experienced people who form the backbone of providing the stability to our nation. They have been contributing immensely, giving us guidance. And if you look at the central bank today, we have a balance sheet which is 1.5 trillion rupees, which is about half the total market cap of all the companies put together. We have a public debt which is 7.2 trillion, which is more than double the market cap of all the companies put together. We manage the banking sector which is more than 5 trillion in assets. We manage the NBFI sector and supervise the NBFI sector, the non-banking financial sector, which is nearly 800 billion in assets. We manage reserves for the country, which is about $8 billion, or more than $8 billion, which is about 1.1 trillion rupees. The EPF that we manage is about 1.5 trillion rupees. We ensure that you have system stability, so that you won't know that you have a system, and that is what is important. The payments and settlements, the FIU, the exchange control, and all the other departments that support the services of the central bank, they all work together to provide the stability for the nation. So I want to say thank you to all of them, and may I ask you to also give them a round of applause for all the wonderful work that they have done. I'm very lucky because I have the best team in the country to work with me, and I really appreciate that. And we have progressed not by accident, not by just random thoughts only. We have carefully managed every year. 2007, we wanted to grow with stability. 2008, our theme was towards prosperity. 2009, we challenged ourselves from our comfort zones. 2010, we wanted to fast-track prosperity immediately after the end of the conflict. 2011, we believed it was time for us to reposition. And we repositioned the economy, repositioned our own selves in order to be able to service our economy better. In 2012, we raised the bar. We ensured that every single person performs better and that all our macro fundamentals will become better. In 2013, we understood that there was going to be the sub $4,000 per capita income, and we need to prepare ourselves diligently for that transition. In 2014, we took the necessary steps to ensure that we don't fall into the middle income trap. We want to take you through that situation without you knowing that you have gone through that process. Now, we believe it is time for us to look at a per capita income of at least $7,500 by the year 2020. I can tell you, my dear friends, it's going to take 2,190 days of careful thought. 6 years is what we have planned for. 6 years is what it will take for us to reach a per capita income of $7,500 by 2020. That's a tough call. I don't think it's going to be something that we can do with just a swing of the wand or just by articulating only. We'll all have to work hard, you and us together. And if we do that, in 2,190 days, we will be able to make that change. It's not a crash program of 100 days. It is a diligently thought through, carefully structured, well-planned, well-implemented project that we'll have to do. And it will take 2,190 days. And I would like to see all of you contributing to that, and we look forward to that. Thank you very much, and wish you all a very, very happy New Year. Thank you very much.